Okay, so Bitcoin touched 43,000 and it could carry on going up. I'm going to show you why Bitcoin touched 43,000. There's a whole series of events that took us to 43,000. Then I'm going to show you a catalyst for what may be a 3 to 4 month bull run, and it's starting right now. And then I'm going to show you, I'm going to address the elephant in the room. We'll talk about what's on the tile, what's in the thumbnail, because you've all been commenting about the thumbnail and how clickbait it is. And it's not, because I am actually selling my Luna. And today I'm going to show you exactly why I'm selling my Luna. And after you hear why I'm selling my Luna, maybe you're going to want to sell some of yours. But that's only happening at the end of the show. So let's get out of bed, because this is the first green day that we've had in a long time. Woke up this morning, it felt amazing. Woke up this morning, I went to bed last night, and I went to bed on Chairman Powell's comments about how he was going to do anything it takes to fight inflation and all those hawkish negative comments. And I woke up this morning, and I woke up to $43,000. I had a tent in my bed and a $43,000 Bitcoin. What a great way to wake up. Let's get out of bed, guys.
Get the fuck out of bed, bitch, go. Get up, and get the guy, go. Time to wake up, bitch, get up. Get up, get up.
You see, there are people in the comments that are going, why did you bring the intro back? Because it's a happy intro, because it gets us out of bed, because Bitcoin is trading at $43,000 and today is a good day and we need to get the energy going. That is why the intro is here. And if you don't like the intro, well, then tune in after 2 minutes and 40 seconds, because that's how long these intros usually take. I mean, that is when you should be tuning in. Especially on a day like this, guys. It's one of the best days that we've had in a long time. As I said to you guys, I woke up this morning, I went to bed last night. When I went to bed last night, Bitcoin was over here. 40,500, 40,800. When I woke up this morning, Bitcoin was at 43,000. It was one of those great days where you open your eyes and you look at your phone and you're like, excuse me? What? And then you quickly go and check your altcoin portfolios. That's exactly what happened. So I look at Bitcoin price, and the first thing I do is I go and check my altcoins. And then I hate myself. When the altcoins go down, I hate myself for buying the altcoins. When the altcoins go up, I look at them and I go, but I knew this was going to happen. Why the hell didn't I buy more when I had the chance? So I'm always unhappy. I know you're also always unhappy. When I buy and the price goes down, I'm unhappy because then I lose money. When I buy and the price goes up, I'm unhappy because I never bought enough, or I knew but I didn't have the information. And there are a whole lot of tokens that I knew about. So we'll talk about those tokens today. In the meantime, you look at the portfolio that I'm monitoring, the one that I need to get up to $50,000. Remember, it was at 50,000 in the bear. It went down to 21,000, and now it's back at 42,241. The tokens that are moving it today, Energy Web token is up 11%. Moonriver is up another 8%, and then Algorand is also up 3.65%. So this portfolio is a good indicator of how the altcoins are doing. So that's what I did. If you are new to the channel, welcome to our channel. Subscribe to our channel. Join the best community in the world. Now you got to ask yourself a question. A lot of these YouTubers haven't been here for a long time. They haven't been broadcasting for a long time. And now all of a sudden they get one green day and they're back. We're not that community. We've been here right through. We've been helping you guys right through, showing you guys how to trade, how to stake, how to get DeFi, how to do everything right through the bull market and the bear market. So if you're new to the channel, subscribe to the channel. If you're here, then like this content, get it out there. If you're watching this on YouTube after live shows, well, like this content, because that's how the YouTube algorithm tells everybody that this is a good show. And today is going to be one of the best shows that we've done in a long time. And the reason why that is, I've got 3 very important things to talk to you about, and then maybe like a 4th thing and a 5th thing. Today I'm going to talk to you about the Bitcoin pump. I'm going to show you why the Bitcoin pump happened. And then we're going to decide whether it's a sustainable pump or whether Bitcoin's going to come down. Then we're going to talk about a catalyst for what may be a massive bull market. But that bull market may not be a catalyst for Bitcoin. In fact, it may suck the liquidity out of Bitcoin and put the liquidity into other coins. And then lastly, today, I'm going to address the elephant in the room, and that is why I'm selling my Luna. And I am selling my Luna. And we're going to talk about that today on the show. So let's get into it. I see you guys are liking it. Smash that like button. Let's get this content out there. It's an amazing day today. Let's do it. Okay, so what happened with Bitcoin? What happened over here? What was this little candle about? In fact, let's take it to the 4 hour because it's easier to see in the 4 hour. So what was this candle here, and then this candle here, and then this candle here? What took Bitcoin from 41,000 or 40,800 all the way up to 43,000? Well, I'll tell you what took it down before that. Why Bitcoin was struggling before that. That's because Fed Chair Powell opened his mouth again, and he said a lot of things, but effectively what he said, what he alluded to, I'm not going to bore you with the details because we've spoken about Powell so many times, but he said that nothing would prevent the Fed from raising rates by 50 basis points in the next meeting. So the most bearish thing that he said inflation is not going to be under control for a while. They have no expectations for inflation to be under control for a while. And he effectively said nothing would stop them from raising rates at the May FOMC meeting by 50 basis points. And as soon as he did that, you can see that the odds went 61.6% in favor of a 50 basis point rate hike, and the 25% basis point rate hike is now at 38.4%. So the market is expecting Powell to be a little bit more aggressive. But even though that's the case, he hasn't been able to move the markets again. So if you look at the Bitcoin price went ever so slightly down. You look at the other markets. So you look at the NASDAQ or the US 500, the S&P 500 is up like 1% right now. The Dow Jones is up 0.5%. The QQQ, which is the NASDAQ, is up 1.5%. So Powell's comments haven't been able to move the markets. And that's because I think the market's seeing right through this. And they know that there's going to be interest rate hikes. And right now, the market is predicting about a 2% interest rate between now and the end of the year. So that's by the end of the year, the market is predicting a 2% interest rate in the United States. But that wasn't what moved the market. What did move the market was Kwon from Luna and him buying his first $125 million order of Bitcoin. Remember, he said that he was going to buy 1.5 billion, and then he increased it to $3 billion worth of Bitcoin. And they did this in the Luna Treasury, so the Luna Foundation Treasury, basically. And they're doing this to protect the peg of UST. So they people are saying they're backing UST with Bitcoin. I don't think that's right. They're not really backing UST with Bitcoin, UST with Bitcoin. They're keeping it as an algorithmic stablecoin, but they have a treasury, and that treasury is going to protect Bitcoin at all costs. And he has indicated that he's going to buy $3 billion worth of Bitcoin to back this treasury. And he said it's even going to go up to $10 billion at some point. So he made his first buy, but watch this, because just before his first buy, just before the first buy, there was a $120 million short position, which was closed at market. And people are saying, maybe this guy knows something that we don't. This happened minutes before the Kwon buy. Then Kwon buys, then somebody else comes in and buys 500 Bitcoin in limit orders. So that's what the 500 Bitcoin in limit orders starts to look like. So you basically got, within a couple of minutes, the short gets closed, Kwon buys $125 million worth of Bitcoin, then you have another buyer coming in with 500 Bitcoin limit orders on Coinbase. So Luke Martin says 3 days ago, Stablecoin says he's planning to buy $3 billion in Bitcoin reserves. Then tweets, I probably should have, I said more than I should have, and then traders notice this, and they see the 125 million buy. Now, when they saw the 125 million buy, they probably thought he was going to continue to buy 1.5 billion or 3 billion, and they tried to front run him, and then he stopped buying. And so I think it was a pretty clever strategy from him. In fact, I think this whole thing is a very, very, very clever strategy from Kwon, because he's now, as I said to you before, he's taken the Bitcoin maximalists and he's moved them to start liking UST. How can you not like UST when UST is buying $3 billion worth of Bitcoin? Even the biggest maximalists. Now, when I reached out to Plan B a while back, Plan B, the guy that made that model, the stock to flow model, which was accurate for a couple of months, and since then no one's ever spoken about, except him. He still speaks about it. But I emailed him and I said, look, do you want to come on our show? And he took a look at our videos. You know what he said to me? He said, I'm a Bitcoin guy and you guys talk mainly about alts. I'm not sure I'd be a correct fit. But even he now tweeted, he says, very interesting. UST is one of the big BTC buyers at the moment and possibly in the future. Still studying UST. But a Bitcoin-backed stablecoin should theoretically be possible with the right amount of over-collateralization and rebalancing to get rid of the BTC volatility. So you can see that he doesn't really understand how UST works. But you see, that's exactly the genius behind Kwon. What he's done now is he's taken all these maximalists, these institutions, everything else, and he's turned them into people that like altcoins, or specifically like UST and like Luna. So AJ says he's removing the maximalist glasses. That's exactly what's going on. That wasn't the only good news yesterday. The other good news yesterday was that Ray Dalio, who is a massive investor, I think his fund has $150 billion under management. I thought it was more. I thought he had like $1 trillion under management, but I read that he's got $150 billion under management. And that's about as much as Fred's got under management. Fred's also managing about $150 billion. Ray Dalio's fund is starting to invest in crypto. So it's planning an external vehicle to invest in crypto. The reason why this is so bullish is not only because Ray Dalio is one of the world's biggest investors. He's always been a big believer in Bitcoin. But Ray Dalio also made a video quite recently, which he posted on his channel, about the evolution of money and how every couple of years, I think he said 80 years, the financial system changes, and how we're in the midst of a financial system change. First, it was the Dutch financial system. Then it was the British financial system. Then it's been the USD financial system. And he says that we're on this decline. I don't know if you guys have seen it. If you haven't seen it, let me show you this video. This video is got about, it's got about 7 million views, if I'm not mistaken. Here we go. It's called Changing the World Order. So if you look at this, it's called Changing the World Order. It's got 7.2 million views. And he talks about the principles for a changing world order.
The times ahead will be radically different from those that we've experienced in our lifetimes, though similar to many times before. How do I know that? Because they always have been. Over my roughly 50 years of global macroeconomic investing, I've learned the hard way that the most important events that surprised me did so because they never happened in my lifetime. These painful surprises led me to study the last 500 years of history for similar...
So I'm not going to play it for you guys. You watched it already because it's had 7.1 million views. If you haven't watched it, you should watch it. You should be consuming content. I worked out yesterday that I'm on average consuming about 6 hours of podcasts and videos every single day, excluding the ones that I actually do. So, I consume Sheldon's show in the mornings. I consume Miles' show in the mornings. I watch every other YouTuber. I watch George. I watch Elio. I don't watch BitBoy. I can't sit through a BitBoy episode. I've tried. I have tried many, many times. It's just impossible. If you didn't watch Sheldon's show today, watch Sheldon's show today. The guy is glowing, and he came out shooting alpha like you've never seen alpha before. Like gunshots of alpha came out of Sheldon this morning. Never seen him. The man is back. The man is back. That doesn't mean that you now need to go and have kids to get your mojo back, because I don't think he knows what he's in for. I don't think he's so excited. I don't think he knows how much work's coming up for him. All right, so that is Ray Dalio. Exactly, I am super busy, but I listen to podcasts at 2 speed, and that makes my life a lot easier. I did think, and I don't know if you remember, when Raoul Paul came on the show, he said that he's expecting a spot Bitcoin ETF sometime in March, April. Now, I don't think he's right, but we are close to March April. And Grayscale first tweeted this, check back here in the morning, we'll have some news to share. But before that, Grayscale said that converting their Bitcoin trust into an ETF is our number one priority. So everyone was expecting that they would convert the GBTC trust into an ETF. But obviously there's no news on that. But it's worth talking about this for a second. Because what I discovered is that you can buy shares in GBTC on FTX. Okay, so you can buy shares of GBTC on FTX, which I didn't know existed. I don't know if it's new. But if you go to FTX, you can go to GBTC/USD, and you can actually buy shares of GBTC. So what are you actually buying here? You're buying a trust that holds only Bitcoin. But you're buying it at a 27.49% discount to the Bitcoin price. So that's what I did when I woke up this morning. I wanted to buy some Bitcoin. I felt like I had FOMO that I missed it. But then I realized that I actually could buy the GBTC trust at a 27.49% discount. So I landed up buying GBTC trust at a 27.49% discount, which is, to me, that's as good as buying Bitcoin, because eventually either this becomes an ETF, and if it doesn't become an ETF, it doesn't become the world's first Bitcoin spot ETF, then what happens to it? Well, they'd have to liquidate it because they can't just keep running this product with a discount. It's just not viable. So to me, if it's a long-term bet, this is probably the safest way to be buying cheap Bitcoin. If you want to buy Bitcoin at a 27.5% discount, instead of actually buying Bitcoin itself, go and buy GBTC. You can now buy it using your crypto money on FTX. You're buying a synthetic GBTC share, and you're getting, you see here, you're getting $38 worth of value for $27.69. So you're paying a 30% discount on buying those Bitcoin. But they didn't, when GBTC came out today with the announcement, it had nothing to do with the Bitcoin ETF. It had to do with something which I think is a bit of a nothing burger, but probably worth talking about if you like nothing burgers. They launched a smart contract platform fund. So, like they have these funds where they allow people who don't invest in crypto, like institutions, to invest in shares that are listed on the stock market. And so now they've launched a new trust, and the new trust is called the Smart Contract Platform Fund, which ironically is a smart contract platform fund which holds smart contract platforms excluding Ethereum. So it doesn't have Ethereum. It actually specifically excludes Ethereum. So what's in this trust? Cardano, Solana, Avalanche, Polkadot, Matic Polygon, Algorand, and Stellar Lumens. That is effectively what they have put in this trust. And this is the breakdown of the trust. So effectively, institutions who want to buy these tokens or get exposure to smart contract platforms ex Ethereum buy this trust. And what they're buying is 24.63% Cardano, 24.27% Solana, 17% AVAX, 17% Polkadot, 10% Matic, 4.27% Algorand. So that's what they're buying when they buy $1 of this trust. And so I think that sent some of these prices running up. I was looking at Algorand. Algorand's up like 15% over the last 2 days because obviously someone leaked the news. That always happens, that the news is always leaked. So that's why it went up. Also, if you look at Cardano also went up the last couple of days because you see it's up 22% in the last 7 days. You see, I wonder what happened then. I wonder if it was coincidental. Just look at what happened here, right? You want to know if there's a mole inside Grayscale. I'll show you whether there's a mole inside Grayscale. Let's look at all the smart contract platforms that are in this. Cardano up 22% in the last 7 days. Solana up 15.5% in the last 7 days. Avalanche up 26% in the last 7 days. Polkadot up 13.5%. And let's quickly go, and Polygon, a very small percentage, 10.9%. Now let's look at other smart contract platforms that weren't in the fund. So Cosmos, 7.5%. Near Protocol, 12.3%. Tron, I didn't even know Tron actually existed. I thought Justin Sun became, one of those government things, government delegation people. What is he? Then you see Algorand up 20%. Instead of Lumens is up 16.5% because they're in the fund. But then you go down to like other smart contract platforms. They didn't go up as much. So, look, there's no chance that anybody's leaking Grayscale information because that wouldn't happen. That would be dumb. I think also what's quite dumb is to leave Ethereum out of this. Like, if you want to buy a smart contract platform, you can't deny that Ethereum is actually all of these combined. And I think that was quite a dumb move not to include Ethereum. But anyway, they know what they're doing. Barry Silbert knows what they're doing. Yeah, they do. They have their own Ethereum one. Yeah, they do have that. Hold on. Fred. I don't know if Fred says he's here, but I can see he's not here. He's not focused. He's not focused. He's going to buy a new car. He's going to buy a new car.
Yeah, he's chilling in the Audi.
What car is he buying?
Q7.
Really? He's buying a Q7?
Yeah.
Isn't that like an old man's car?
Yeah, he wants kids and stuff, you know.
All right. I've got to talk to Fred. Don't buy the Audi Q7, Fred. Yeah, so as I was saying, I do think that Grayscale maybe should have added Ethereum into their trust, especially now. I think now would be an amazing time to add Ethereum into their trust. And I'm going to show you why, and why I think Ethereum is actually the catalyst for a 3 to 4 month bull market that maybe is completely decoupled from why Bitcoin is running. So this is a very important segment. You got to listen to this, because if we are right here, and I think we are right here, because I'm going to present all the evidence to you now, and then you can make your own decision. But very unreliable car. That even Jim Cramer says it. If Jim Cramer says it's an unreliable car. Okay, so let's talk about why I think Ethereum now is an amazing play, and maybe the catalyst for a bull market very different from every other bull market that we've seen. And we can look at it in context of how Ethereum is performing against Bitcoin. That is the ETH BTC chart. It shows how Ethereum is performing against Bitcoin. You see that? And there's a massive breakout. And I don't know, Carl will tell me it's not a reset, retest, run the horizontal.
It can be, yeah, but horizontal, I think, is a little bit more objective.
Yeah, but this is a good breakout, right?
Yeah, it's working.
It's working. It's a brilliant breakout. Why is ETH breaking out? I mentioned to you yesterday. We spoke about it very briefly yesterday. And I said to you that the reason why Ethereum is breaking out against Bitcoin, remember, this is not against USD. Against USD, it looks much better. But against Bitcoin as well, that just shows you relative strength, is because there is a testnet for the ETH 2.0 or the ETH staking merge. Basically, they got to merge. So let's just talk about what's happening right now. Right now, you have Ethereum. Ethereum is mined using proof of work, like Bitcoin. Part of moving Ethereum to proof of stake is somehow you have to merge the chains, because you've got all these transactions on the proof of work chain, and then you've got this new proof of stake chain that's starting. And somehow you have to merge these without losing all the tokens and all the ERC20 tokens and everything else that comes with it. So it's a massive, massive, massive role. And it's been one of the biggest risks associated with Ethereum. Will they get this done? Will they get this done right? Well, now there is a date for this. The date is June 22nd, which is 3 months away. And you have this merge of the ETH chains, the two ETH chains. Now, what actually happens when the chains merge and we move to proof of stake? So let's just try and understand what the implications are. The comments here have turned into Top Gear. Everyone's now, the vaccine specialists became car specialists. No, the vaccine specialists became geopolitical experts. No, became economists, inflationary economists. Then they became geopolitical experts. Now they've all become car experts. Fred's car experts. You see, no more car comments, dude. No more car comments. So what happens? So they're going to they merge the chain, and it's already happening. There's a testnet going live, and apparently on the testnet, it's actually working very well. What happens? The first thing that happens is ETH moves from proof of work mining to proof of stake mining. Okay, that's the first thing that happens. The second thing that happens is ETH becomes deflationary. And the reason why ETH becomes deflationary is, remember that every day, more Ethereum are released with every block that's mined. And then you got EIP 1559, which actually burns Ethereum. Now, net, since we started, we've had 3.085 million Ethereum minted, and you've had 2 million burned. So the net issuance is about a million ETH. Okay, so right now, ETH is not deflationary. But one of the things that this POS thing does is it reduces the number of ETH, the issuance of ETH, from 12,000 ETH, which is what we are currently creating every single day to reward the miners, to 1,280 ETH. So you're cutting it by 90%. You're cutting the ETH issuance by 90%. Because you're cutting the ETH issuance by 90%, and you are still burning the same amount of ETH using EIP 1559, ETH automatically becomes deflationary. So the first thing is we move from proof of work to proof of stake. The second thing is that ETH becomes deflationary. The third thing that happens is that the ETH rewards for staking ETH. Now, right now, if you go to Lido Finance and you want to stake your ETH, you can see it over here. You're going to get about 4%. You're going to get 3.9% staking rewards. But after the merge, the rewards for Ethereum are going to go to about 10 to 15% post-merge. So again, what happens? We go from proof of work to proof of stake. The issuance of ETH drops by 90%, and therefore ETH becomes deflationary. And the staking rewards increase from 4% to, as I showed you over here, 10 to 15%. Okay, so that's basically what it is. Now, if we were to break this down into what's actually happening, the first thing is ETH is becoming deflationary. The second thing is ETH is becoming ESG friendly. ETH is becoming green. It no longer uses this evil proof of work mining. It's now a green, nature friendly, earth friendly crypto. And the third thing that's happening is that you're starting to get insane rewards for holding ETH. Okay, but now let's look at what's actually happening, because we've spoken about what's actually happening and what's actually happening. But what's actually happening is you've now got two cryptocurrencies that institutions can invest in. You've got Bitcoin and you've got ETH, because the rest are too small. When you look at CoinGecko and you say, okay, let's look at this. You've got Bitcoin at $817 billion market cap, and you've got ETH at 362. And the next real crypto, hold on, let's go back there because you guys can see exactly what tokens I've been looking at today, which is not good because you'll degen and you'll destroy yourselves. Okay, so you've got market cap 815 billion, market cap 400 billion. And then the next, no, they're not going to buy BNB. The next one, they're not going to buy XRP. No one's buying XRP. The next one is 33 billion. So what's happening now is you've got two cryptocurrencies in the world that are actually accepted by institutions as being not too risky. That's Bitcoin and ETH. One of them uses this very evil form of mining called proof of work. And most funds, not most funds, but lots of funds and pension funds can't invest in Bitcoin because it is not friendly to the environment. It's the same reason why Elon Musk eventually had to succumb to his directors and stop accepting Bitcoin as much as he loves Bitcoin. Now you've got one of those two, which is actually friendly. It's friendly. Okay, so you can actually invest in it. The second thing is the following. Right now, if you're a fund manager and you look at the returns on ETH and you say to yourself, okay, well, you know, if I own ETH, I'm getting 3.9% return. As a fund manager, you say to yourself, hold on a second. At 3.9%, it's actually not worth staking your ETH. Why? You've got smart contract risk. You've got to protect yourself. You've got to move money from one wallet to the other, to the staking. Staking probably can't be done with some custodians. For 3.9%, because ETH is increasing in price, you can kind of justify just holding ETH and not staking it. But when you are earning between 10 and 15%, that's a number. Okay, that's a real number. You cannot not be staking when you get between 10 and 15%. So what's happening now is you've got this cryptocurrency, which is one of the top two, so it's already accepted by the world as here to stay, which now gives you a 10 to 15% return for staking it. Okay, but that's not where it ends. That's not where it is. That's not where it is. Let me tell you where it ends. Or let me go one step further. If you put your money into Anchor Protocol today, you're taking your US dollars and you're investing your US dollars on Anchor Protocol and you're getting 20%. But you're getting 20% on US dollars. And US dollars are depreciating at 10 to 20% a year just because of inflation. So that same US dollar, the same US dollar that you're putting on Anchor Protocol and you're getting 20% on, that US dollar is depreciating by 20% because the Fed is increasing the supply of US dollars, and UST is just a placeholder for USD, right? For US dollar. So if you start the year with $1,000 on anchor, at the end of the year you've got $1,200, but inflation's been 15 to 20% because that's what real inflation is. So actually your net hasn't really grown. But on ETH, you are investing a deflationary asset, an asset that is increasing in value and decreasing in supply at the same time. And you're getting 10 to 15% rewards. So now my question to you is, would you rather be putting 20% in anchor on UST, which is declining in value because of inflation, or there's another option. Another option is just take ETH and stake ETH and get between 10 and 15% on an asset that is being burnt and is deflationary and is also growing in adoption. That is for me where the big trick is. Because now you're going to get a whole lot of fund managers going, look, we can buy this ETH thing, which we accept. It's like the other Bitcoin, because that's as much as they know about it. They don't even know that it's a smart contract platform, but they do know that it's big enough to invest in, and custodians hold it, and it's green and friendly, and you get 10 to 15% of it, return on it, and the smart fund managers are going, hold on a second, this is a deflationary asset, whereas if I get 20% on my USD, at the end of the year, it's worth 20% less anyway, so I actually haven't made any progress. That's the genius. So this is not making ETH transactions cheaper yet. That's not the merge. That's the next part. That's the next part of the ETH 2.0. So that is why I think it's going to be huge, and I think that a lot of new money could be coming into ETH, and I think we could have an institutional run into ETH between now. Exactly. So that's whoever said it is right. Do we have that song? All we are saying is give ETH a chance. Before June, before the merge, we are saying is give ETH a chance. All right, I'm not singing to myself anymore. All right. How many likes have we got? Because when we get to 3,000 likes, I will tell you why I'm selling my Luna. And if we don't, I swear to God that I am not telling you this. Can't swear to God. That's not allowed. Not allowed to swear to God. While we're waiting for the like count, you got 1,500 likes to go, chaps. While we're waiting for the like count, I want to just say a few things about Fred's website. This is Fred's website. He built it with his own hands. And I want to say that if you're not getting the Morning Brew, this Morning Brew comes out every day, and Fred writes it himself, basically. So he writes it himself. It is everything that he's watching in the markets between 2 and 4 in the morning. So if you're not watching this Morning Brew, it's the best piece of alpha in the world. Don't tell him ever that we said it. It's actually not Fred that writes it. It's Gabriel. I'm just kidding. You got Sheldon's chart of the day. Sheldon's been calling them one after the other. He's been unbelievable. And then there's 2 stories coming out, which I told them not to publish until I tell them. And remember, if you do interact on the website, you get these Phantom Starter NFTs. We'll give away some today, $600 each, worth $600 each. So we'll get that today. We'll talk about that today. Do we have 3,000 likes yet? Because if not, I'm going to talk about Nord VPN.
Okay, let's refresh quick.
You better hope so. Otherwise, I'm talking about VPNs again.
2,000.
2,000. You guys got to like. Otherwise, I'm not doing this.
They just need to tell one friend to like.
Just tell a friend. Gabriel is an excellent writer. While you guys are liking it, I'm going to tell you again. Your one objective in crypto is to protect your crypto. If you don't have a VPN, you're not protecting your crypto. We are going to give away $1,000 every week to one person who took a VPN and decided to protect their crypto. That cost you $3.16 a month to protect your crypto. There is a referral link in the description below to protect your crypto at $3.16 per month. The deal expires. I don't know when it expires, in like 72 hours. It expires in 8 hours and 56 minutes. Okay, but I'm going to tell you a trick, right? Okay, this is not true because tomorrow it just renews again. So every 12 o'clock at night, it renews again. So don't fall for this. But you should get the deal, because if you do, tomorrow I'm going to give away $1,000, and then every week I'm going to give away $1,000 to one person who buys a NordVPN. So if you've been wanting to buy a VPN, now's your chance to buy a VPN. Okay, do we have 3,000 likes, or can I go home?
2.3. So.
2.3. So there's 700 likes. So I'm going to go home.
Yeah.
All right. I'll see you guys again tomorrow. Until then.
2.4. We're getting there.
If we get there before I leave the door, call me back.
End the show.
All right. You guys win. You guys win. Let me plug myself back in. If you want a CryptoManRan punk shirt, get a NordVPN. All right, let's go. Let's talk about the elephant in the room. This is the elephant in the room. Everyone tuned in for this. Let's talk about this. I think it's important that we talk about this. I am selling my Luna. And for those of you that know me, and I said you're not allowed to swear to God. Come on, I took that back. For those of you that know me, you'll know that Luna has been my absolute best investment of all time. Luna has really been my absolute best investment of all time. And I want to take you through a little journey of my experience with Luna. So I was the host and creator of the world's only televised show on CNBC. And we were the first show that went to South Korea and explored the crypto scene in South Korea. And when I was in South Korea, I met these two very smart guys at the Hashed Accelerator. Hashed is probably the best crypto investor in the world. Amazing. Thank you so much. Nice to have you on the show. I used to wear a suit then.
So we're working on Terra, which is a price-stable cryptocurrency.
A stablecoin?
Correct.
Do we need another stablecoin?
We reviewed all the stablecoins that have come out, and we told ourselves that, hey, there's one bucket that's vulnerable to speculation and another bucket that's vulnerable to regulation. And we wanted a decentralized coin that's free from both of those.
What do you mean?
So if you look at a stable coin like Tether, it's backed by real world assets. So there's $1 that's backing every Tether that's issued. But that's quite a centralized way to solve this problem.
Because you don't know where the Tether are and whether it gets audited, etc.
Correct. It's not on the blockchain. It's not transparent. The bank could get seized. There's custodian risk because there's... Okay, so that was how I met them. But you can see that the date there was 10th of May, 2018. That was when we... I looked funny back then, huh? I had more hair though. You see, I had a lot more hair back there. Anyway, so that is when I met Doe and Danny. They were in the Hashed Accelerator. And I took an investment in them. I invested in the first investment round back then, and that wasn't the only time that I invested in Terra. I actually invested in Terra a whole lot afterwards, which when it actually became cheaper than the IDO price. So I don't know if you can see this. I posted this. This was actually my producer at CNBC. His name's Adrian Bashuk, and on the 18th of July, 2020, I said to him, "Listen, I'm buying Luna at 26 cents. I heard it's good." So I bought Luna 18th of July, 2020. At 26 cents. I mean, if you just think about it, if you bought, let's say, I don't know, $250,000 worth of Luna, you bought a million Luna, that would be worth $100 million today. Just think about that. Anyway, you can't say that you never had the chance because you didn't have the ICO. Because if you do look at Luna for a long time, let's quickly just try and find Terra. Let's just see if we can find, let's quickly click on Max. And you can just see how for a long time, Luna didn't actually do anything. What's going on here? Let's try and refresh that. I think it's CoinGecko, unusable. Okay, so what you can see is that for a long time, from the whole of 2019, the price went down and down and down, and now it went under the ICO price. It went to 20 cents, 23 cents, 24 cents, 27, 13. That's where it was, and it was there for, I mean, as far back as CoinGecko goes. It goes, 2 years or whatever, it goes back. And Luna traded it. And so I bought myself a whole lot. You can see on this day, I said to him, Adrian, look, I'm buying a whole lot of Luna at 26 cents. I'm not going to tell you how many I bought, but I bought a whole lot of Luna at 26 cents. And I took those Luna and I invested those Luna, or I staked those Luna in Terra Station, and I earned my rewards, which were between 7 and 14% depending on the time, and I got a whole lot of airdrops, and it really has been the best investment that I ever made. In fact, I think I've probably made about 400 times my money, maybe 500 times my money at least on Luna. Remember, I've made 400 times my money, but I've also got airdrops, and I've got between 7 and 10% yield. And remember, that compounds, because if you restake it, it basically compounds and compounds and compounds. So it's been my best investment ever of all time. And if you ask me what I think is the most promising token out there today of the major tokens, I would probably say that the most promising token is Luna. I think it's the best token out there. I think it's, to me, the most innovative token. It's one of a kind doing what they're doing. It's got network effects. It's got very smart people behind it. And so if someone said to me, listen, of the top 10 tokens in your portfolio, which one would you put more money into, or which one you think is the best? I would say that I think Luna is the best. I think it's the best. But the time has come for me to sell Luna. And I want to show you why I'm selling it, because you may want to do the same after you see my reason. And I think it's a very good reason. You may want to do the same. You may want to do the same when you hear this. It's important. This is a real, what's the word? Like, this is a fundamental thing. This is not a baby thing. It's
like a good reason.
It's a fundamental reason why I'm selling Luna. And I want to show you why I'm selling Luna. So as I said to you, I've made 400x on it. I have staked it. I've got millions of airdrops. I've invested in the ecosystems. I've invested in Astroport, Kujira, Orca. I've had the best history with Luna. I love Kwon. I speak to him on Telegram every now and then. Love the other investors. But the reason why I'm selling is as follows. When I invested in Luna, I put like 1% of my portfolio into Luna. And the rest of my portfolio was 99%. And that was cool. Like, I had 1% of my portfolio in Luna. It was a small coin, and it grew. It just grew and grew and grew. The problem is that when I look at my portfolio now, that's what my portfolio looks like. Because Luna's done 400 or 500x, and my portfolio now looks like Pac-Man's trying to eat it. That's what's going on, and Luna's basically eating up my whole portfolio. So what started off as this, just by hodling, became more than 60% of my portfolio. And as much as I love Luna, and I do love Luna, and as much as I think that the chances of Luna failing are very, very, very small, what I don't want to do is wake up one morning and think to myself that 60% of my portfolio has been wiped off because for the 0.0001% that something does happen to the stablecoin or to Terra or, I don't know, to Kwon. I think Luna is devoid of Kwon. It's much bigger than Kwon at the moment. But I don't want to wake up one morning and lose 60% of my portfolio. So what am I doing? I'm just taking probably a third of my Luna position, maybe less, maybe 25% of my Luna position. And over a period of about 12 months, I'm going to start lightening up on my Luna position. And so now the question you ask yourself is, well, what are you going to buy with that money? Because what are you going to buy with that money? And the answer is very simple. I've selected 5 or 6 coins, which I think are about the same risk profile as Luna. Now, why do I say that is because I could take this money and I could invest this money into highly speculative bottom coins, and that might do 150x, but that's not what I want to do with the money. I want to keep the same risk profile in my portfolio. And so I'm taking that and I'm investing in probably 6, 7 coins. I'm putting my money into Bitcoin. I'm putting my money into Ethereum. I'm putting my money into Arweave, putting my money into Solana, putting my money into Avalanche, and I'm putting my money into Thorchain. So I'm really selling 25% of my Luna position over a period of 12 months, say. And I'm going to put that into safer assets. And that way, even though I really have conviction, I really have to have conviction about what's going on with Luna, I don't have the risk that one day I wake up in the morning and 60% of my portfolio has been wiped because one token has been wiped. This has made my portfolio very big. And as a result of that, I don't want to take a huge knock one day just because something happened to one token. So what I'm doing is I'm doing the responsible thing. And the responsible thing is, even if you love a token, you need to be looking at your portfolio from time to time. And you need to be rebalancing that portfolio. And that is why I'm selling some of my Luna. And I'm doing it responsibly over a period of 12 months. And I'm doing it in such a way where I'm taking that and I'm investing it into other layer 1 projects with similar risk profiles, not same but similar risk profiles. Now the smarty pants people in the chat, they are very smart people asking me about tax. Yes, I am paying tax. I'm paying capital gains tax because because I've been holding it for so long, it's actually now a capital gain, not an income. So I'm paying capital gains tax. But still, it's worth it for me because, again, you don't want to be that person that wakes up one morning, have your majority of your portfolio in one token, and then you're only left with a small part of the pie, which is big, but not big relative to what you used to have. So as much as I do love Luna, and if you ask me about the token that I'm most excited about in my entire portfolio, Luna is the one. But I'm selling my Luna. That's it. Good reason, bad reason? Not urgent. Not urgent, but good reason. Okay, is there anything else we need to talk about today? I think that's it. Let me know what you think. Let me know if it's good decision, bad decision. Let me know if I gave you enough alpha per minute. Let me know if you bought a Nord VPN. Let me know whether Fred should buy the Audi Q7. Let me know if you'll be here tomorrow. I will. I'll see you guys again tomorrow. Until then, trade your Luna well, my friends.